Hello, it's Carolyn Grimm, and I am here to talk about the difference between restricted funds and unrestricted funds in nonprofits. So, the basic difference between the two is that restricted funds are for a specific purpose. Unrestricted funds have flexible use. So, with restricted funds, a donor may specify how those funds are going to be used. For example, they're going to be used for our after-school program, or they're going to be used for a new building that we're doing, or we need to purchase some equipment. So the donor will specify that I am donating to this particular program or this particular project. With unrestricted funds, those funds can be used for whatever the organization needs those funds for. And usually those are going to be operational kinds of things. So salaries, rent, utilities, or wherever those funds are most needed at the moment. So there can be a number of different types of restrictions. The one that's probably the most common would be a donor imposed restriction. So this is where the donor says, I only want my money to go to this program. So maybe it's a scholarship program, and the donor says, I only want my money to be used for this particular scholarship, or I only want my money to be used for this new building that we're doing. You could also have a legal or regulatory restriction. You'll see this with federal grants as an example. So those grants can only be used in a very specific way, and they've gone through a process before they're approved, and those restrictions are going to be part of the grant from the federal government. So the federal government will say, yes, we're going to approve your grant to do this specific project. Those funds can only be used for that project, and you have some really strict reporting requirements for this grant. There could also be restrictions on an endowment fund. So if an organization has an endowment fund, the restrictions on that fund might be something like the nonprofit can only draw out the interest, not the principal, or they can only draw out a certain amount, or they can only draw out funds if it's for a specific thing that's specified in that endowment. You can also have restrictions that are conditional gifts. If you do this thing, I will give you this money. If you don't do this thing, you have to give the money back to me. So a conditional gift might be something like, I'm going to give you this money with the understanding that you are going to build a playground. If you don't build that playground, I want the money back. So that's a conditional gift. We also might have restrictions that are created internally. We may have board designated funds. The board of trustees may say, we want to build a reserve and we're going to put away a certain amount of money for that reserve. So those are internal restrictions. You'll see that a lot with nonprofits that are building capacity. They need to increase the funds that they have available so that they can add a new position, for example. So they're going to start to tuck a little money away, or they're trying to build a reserve so that if there's an awkward timing on when a grant is coming in, they've got some funds where they can start that project while they wait for the funds to arrive. When we're talking about restricted funds and unrestricted funds, it's really important for nonprofits to keep careful track and to make sure that they're doing things in the way that the donors or the grantors or the board is specifying. So some of the common mistakes we see are using restricted funds for general expenses. So you needed money to make payroll, so you moved it out of the playground fund. Another issue might be a lack of clarity about those restrictions. We see this a lot with nonprofits that have been around for a long time, particularly small nonprofits, where they might have had a staff person at the beginning, but now they have 5 staff people, and the first person retired and nobody remembers what the restriction was. So that clarity is a really important part of it. Going along with that, there might be poor documentation of those restrictions. The first thing you're going to do if you're applying for something like a federal grant is you're going to read everything very carefully, and you're going to make sure that everything you're doing falls within the requirements of that grant. Documentation is extremely important. So here's how to stay out of trouble. Here's some best practices. We're going to keep those funds that are restricted separated. We're going to use fund accounting to do that. And then we need to make sure that we are communicating clearly with the donors or the grantors. So if it's the federal government, they are going to have specific reports and specific periods of time when they want those reports. So it's important to make sure that we're doing that. Or we've got a donor that's donated to that playground project. We want to make sure that when the project finishes, the donors get communication from us saying, look what you did. Look at these happy children playing on the jungle gym. And then we want to make sure that we're planning out our operating expenses as well as we can so that we have enough unrestricted funds to meet our operating expenses. That keeps it a lot clearer. Planning ahead for revenue in nonprofits, of course, so many things can change. So it's really important to be always planning forward so that we have an idea of where our cash flow is going to be in 3 months or 6 months or a year. So key takeaways for restricted and unrestricted funds, managing those two categories, extremely important. It protects the nonprofit. And it also builds long-term relationships with donors. So if you're working with a grant foundation and you've gotten one grant and you've done a great job with it, they're more likely to give you the next grant for that next project that you're working for. But it all comes back to making sure you've got those restricted funds really well managed and documented. I will see you in the next video.